Hey Gigi, what time is it?
It's time for the Southern California Foreclosure Report.
That's right, and for you to do your homework. Get going. We're going to take a look at the national foreclosure filing numbers, and those are up, but there's an interesting trend you have to see in Southern California foreclosure numbers. We're going to give you the eye-popping number of days it takes to foreclose on a property on average. Hey there, Christian Walsh, real estate agent with Wire Associates. We have been helping buyers and sellers make the best data-driven decisions in this crazy market, and it's time for the Southern California Foreclosure Report. We're one of the only resources you can turn to get the numbers for Southern California. So if you're ready to dive into the foreclosure numbers for LA, Orange County, Riverside, San Diego, San Bernardino, and Ventura counties, hit that like button. And let's get started. Let's run through the numbers. First, we're going to take a look at the national data from Adam Data, one of the best resources out there for foreclosure information. And they've crunched the numbers for 2022, just like we've crunched the numbers for 2022 for Southern California. They've done it at the national level. This chart shows you exactly where we are when you look at foreclosure filings across the nation. Now, it's important. It puts it in perspective. 2022, we were definitely up year over year. See the headlines, foreclosures up double from last year. Well, yeah, last year was a record low. What Adam Data is reporting, and you see in their numbers here, that we're below 2019 levels. We're below the pre-COVID foreclosure levels. Now, that is true at the national level, but we're going to show you some interesting trends that we're finding in the Southern California data and why it's important to look in your local market. Local data is what matters. So you can see that while foreclosures are down at the national level and that we're not yet back at 2018, 2019 levels, we are on our way. Will we get to 2009, 2010 and those crazy levels? We will see. Now we're going to run through the Southern California data quickly, and we're going to do this quickly because there's so many slides here. I don't want to bore you to tears, but it's all relevant and we have to take a look at this. We're first going to look at monthly data, and then we're going to show you the annual data, and there's important reasons we're going to share these annual numbers with you. So go ahead and take a look. First step in the foreclosure process, notices of default. So someone's missed a payment and a minimum of 120 days later, a notice of default shows up on their doorstep, and you can see that we have a dramatic increase, particularly in Los Angeles. We'll get some of these other counties out of the way so we can take a closer look. That is a big number, 548, that we have for 2022 for December. Bear in mind, this is just 1 month. And this is higher than we've seen in going back. We had a surge in 2019 that dropped due to COVID. So we are catching up on foreclosures. Now, why does LA have such a big spike where we're not seeing in some of the other counties? Well, one of the things that LA still has is the LA eviction moratorium at the city and county level. In this number, there's landlords that are losing their properties. I've talked with them. There's a lot of folks out there. They haven't received rent in over 2 years. They cannot afford to continue to keep their property. So they've stopped paying their mortgage at this point in time and they get a notice of default. Now, the irony is if the lender forecloses on the property, they're not going to be able to get the tenant out either, just like the landlord can't, unless those laws change, and they will potentially at the end of January. So now we are including 2011 for perspective. The numbers aren't significantly off 2011. Now, 2011 was global financial crisis time for foreclosures, but a lot of folks had already moved through the notice of default into the next step, notice of trustee sale. You're going to see that in the numbers here. Now, notices of trustee sale. So this is the second step. So 120 days went by, the notice of default was issued. Another 90 days, the notice of trustee sale will be issued, and that sale can take place 21 days later. So here we are for notices of trustee sale. We're seeing an increase, and we're not at 2015 levels. Again, Los Angeles is much higher. If we get that out of there, we can see that numbers are more moderated throughout Southern California. So LA is starting to get into a little bit more of a trackable foreclosure wave, if you will, a teeny tiny wave, but it's something that we'll have to continue to watch. Giving perspective, and here's what I was talking about, where notices of trustee sale for 2011, that's where a lot of properties have moved into this phase. You can see that the numbers are completely different. 4,700 plus notices of trustee sale filed in December of 2011. We're at 360 now. So we're not at global financial crisis numbers for notices of trustee sale. and we haven't had the big run up in notices of default that are going to lead to these numbers. So that's important to understand. This is a process for foreclosure, and we're not seeing huge numbers at any stage yet like we saw during the global financial crisis, but we have to keep tracking. Moving into the real estate owned. So these are properties, the foreclosure process is over, the auction occurred, and these properties went back to the bank. These were not purchased by third party. They weren't bought by a flipper or an owner occupant. So that's important to understand as well. These actually went back to the bank. Now we see crazy low numbers here for 2022 and the number of properties that have gone back to the bank. And wait till you see the annual numbers. And why is that? Well, we saw that foreclosures stopped due to the foreclosure moratorium. So that's why we saw the drop in notice of default and trustee sales in 2020 and 2021. Now it's going to take a little while for the properties to move through to the REO stage. The other side of it, there's flippers out there that are still buying these properties to put them back on the market. The other thing to bear in mind is a lot of these people still have equity, so they don't need to be foreclosed on. They stopped making their payments. They got a notice of default, notice of trustee sale. They can still sell as a normal sale on the market and walk away with equity. This puts it in perspective when you see 2011, 1,376 homes were foreclosed on in 1 month in Los Angeles. That's a big number. Even Riverside, 785. You can see why we had excess inventory back in those days when that many are going back to the bank in 1 month. And then what happened? The next steps, it would go back to the bank. The lender would have to assign an agent. The agent would figure out who's in the property, if anybody. And that's what we did during this time. We were an REO agent and we were assigned REO assets. Sometimes it was occupied by nobody. Sometimes it was occupied by the owner. And then you'd get them out with cash for keys or a 3-day notice. Sometimes it was a tenant, and sometimes the tenant had a lease. So you'd have to do cash for keys or honor the lease. There'd be a fix-up period, do a few repairs to the property, get it on the market. So that's what would happen after they were foreclosed on. Quick run through annual numbers. So notices of default for the entire year, and we have 2011 in here. Now remember what I said about 2011. 2011, the notices of default were decreasing. A lot of folks had moved into the next phase, which was the notice of trustee sale. We weren't getting as many. So when you see 2022 compared to 2011, we're still well below, but it's gone up. The other reason it's important to look at the notices of default, because this is essentially our supply for future foreclosures. We have about as much supply as we did in previous years between 2015 and 2019. So we can't expect in 2023 a huge flood, a huge wave of foreclosures, because that's our inventory going in. Other properties can enter this notice of default stage and maybe add to this number, but right now that's what we have going into the new year. These are properties that are potentially going to be foreclosed on. So don't expect a huge number of additional foreclosed properties in 2023 versus 2022 unless we get more that actually make it to the REO phase. And that's what I'm going to show you next. So here we're going to take a look at the real estate owned, the properties that made it all the way through the foreclosure process. Now, I don't have full annual data for 2011 or 2012. It has been sunsetted by Black Knight, but you saw what we had for 1 month in the REO data for December. So you can see that the numbers were massive back in 2011, number of properties going back to the bank in a full year. Now, 2015, we were still coming out of that. There were still people moving through the foreclosure process, getting kicked out to that phase. And then it continued to drop to where we are now, record low 2020 and 2021 because of foreclosure moratoria. And then we're still low. Those properties in 2022 have not kicked all the way to the end of this foreclosure process, and others have been purchased by third parties and others sold with equity. So that's an important thing to look at. Now, it's hard to see these numbers. Of course, you have to subscribe to our weekly email newsletter to see these numbers up close. But let's take a look. The number of properties in 2019, for example, that went back to the bank for the year in Riverside were 500. And we can see that in Riverside, there were 622 in 2018. So if we get to these numbers, these are certainly numbers worth tracking. If you're looking as an investor or an owner-occupant, you want to move into one of these, you should be tracking foreclosures. When we get back to these normal levels, there could be anywhere from 30 to 50 homes per month, depending on the county you're looking in, that are going back to the bank. So we encourage you to sign up for a foreclosure.com account. We're going to show you that in a minute. And don't forget, we're real estate agents based in Southern California. If you are at risk of foreclosure, please reach out. Or if you're looking to buy a foreclosure, please reach out. We can help you anywhere in Southern California. And we have resources to help you beyond. And I promise to share with you the eye-popping number of days it takes to foreclose on a property. And this is relevant because what that means is if people are missing payments right now, it is going to take a long time before those properties are potentially foreclosed on. This chart from Adam Data shows that as of Q4 2022, it's taking 852 days to foreclose on a property in the United States on average. That's over 2 years. It is taking a very long time to. Don't forget, we have the foreclosure.com link below to get that 50% off. And we also have another link for all listed short sale and bank-owned properties in Southern California. Click that link to receive those in your email inbox. And of course, you're not going to want to miss out on the charts from this video, so make sure you subscribe to our free weekly email newsletter. And you're also not going to want to miss this next video here. Thanks for tuning in. This has been Christian Walsh, real estate agent with Wire Associates, and we want to hear from you.